Hello all, and happy new year to you all. I know I haven't done a video for some time, but sometimes you have to take a break from the game and enjoy Christmas, enjoy the new year with your family and friends. So we're back, and we're back with another case study for you guys. So who I've got on the call today, I've got Harry Polglass. He's going to be doing a case study also with gold. So Harry's been with us for about 8 to 9 months now, and starting fresh, kind of fresh out the water. He knew a little bit before, but yeah, he's actually killing it now, literally doing great numbers, catching great trades, and he'll be showing you one that he actually caught on gold. I'll be doing NZDJPY for you after, and maybe touch up on gold as well. With a great trade that we actually managed to catch that held very, very good numbers as well. So without further ado, what I'm going to do, I'm going to just let Harry share his screen, and then from there, yeah, he's going to give you some sauce.
Yes, let's go, bro. Appreciate you having us, man. Let's do this. So, you see my screen, bro? Yeah?
Yeah, we can see it, man.
Yeah. So this is a trade that I managed to capitalize on coming into 2022. As you can see, the date of when I screenshotted this was the 30th of December. So I'll just go into the live chart now. I've took this back to the day of entering this trade, and I just want to talk through why I took it and how I managed to capitalize on a 1 minute entry with a overall larger target being a H4 IPA. So seeing on gold here on the daily, we had these equal lows printed to the downside. We then came down and swiped these equal lows, gearing up for, I was expecting a rebalance of this impulse to the downside. So what I was looking for was trying to capitalize on a move back up into in and around this area, which you'll see when I drop to the smaller time frame being the H4. We've got this big gap right here, big gap in the market, given that there was only sells offered at this point in the market. Using this volume profile helps us identify where the very thin order books are in large impulse moves in the market. So when you have a large impulse to the upside or to the downside, you can then use the volume profile just like a fib to then measure the volume in that impulse move. So as I mentioned on the daily, we had these equal lows here printed on the downside. We swipe those equal lows, price comes up, we break structure over here. On the daily time frame, we come back into the volume profile point of control, which also lines up with a daily remorse level. We get that small pullback into there. But what did we do before we had that small pullback? We created liquidity, protecting what? Protecting this IPA gap up here. So that was just another confluence to add up to my trading position. So if I drop down now to the H1 time frame, we can quite clearly see bullish momentum in the market, impulse. We get that little pullback to that remorse and that point of control, which I mentioned on the volume profile. Price then comes up, we break this high yet again. We then get that pullback. I was anticipating for price to tap back into a H2 demand down here, which we didn't quite get. But that was my initial first entry, which I was looking to enter on to then bring price obviously up into this IPA area. If I just mention first as well, my target being for this trade was sitting around 1830, which is a nice round number, which also lines up with 50% of this gap over here to the left. So yeah, like I say, I was looking to buy it from this H2 demand in here, which we didn't quite get. We then engulf to the upside, push up. If I drop down to the 30-minute, as we can see here, we push up to the upside, supply fails. We break this little supply level here. We then get that pullback. And then if I just go to I think it's on the H4, we can quite clearly see on the H4 we have this engulfing candle, yeah, which feels this is the point of the market of the H2 demand, which fails to tap that demand. We then get that H4 engulfing, and it's something like this where, you know, yeah, you get that engulfing candle, we pull back to 50% of this demand now, but obviously I'm not willing to risk 50% of this demand. I'm not willing to risk, you know, nearly 100 pips. So this is when I'm dropping to the smaller time frames. This was the point where we tapped 50% of that H4 demand level, and price then starts to rise. I'm yet again dropping to the smaller time frames. I'm seeing demand starting to hold up lovely as we wick into this demand here. And if I just drop it right down now to the 1 minute, it was in and around this area where I had my entry. So looking from, I like to start really looking at gold coming into New York session, just because it's a dollar related pair, and that's when you can start to see a lot of volume come into the market. So as we can see here, 12.59, bang on, pretty much 1 o'clock, we get that volume that brings us to the downside, swiping a lot of liquidity over here, which was printed in London. This volume to the downside initiates this move back up to the upside, which yet again, as you can see, supply levels start to fail. We don't start to respect supply levels. Demand levels right here start to hold up. So I was looking at this, I missed this first entry in and around here. Price then goes up, and once I see supply fail right here, I was looking at this level in and around here because I'd noticed that this demand level had already been mitigated. So I was looking at this level and I was looking at the remorse level. Nice and simple, our 2 points of entries. I see price come back into this remorse level. Prime 2 o'clock, prime New York session. I see this down candle, I see this up candle, pretty much engulfing, and then this candle right here on the 1 minute, we get taps back into this down candle, and once that 1 minute candle had closed, bang on to 12 minutes past 2, that's when I was willing to put the risk on the table. My risk on this was 12 pips. Didn't need to be any more. You know, you could add 30 pips, would have been fine with me, but you know what, on the 1 minute, I was happy to risk 12 pips in this position right here. And as we can see, this volume continued to develop, leading out of New York session. If I just go back to the 30-minute time frame, and I'll just play this on, and you can see why we like to set TPs, why we don't just like to enter a trade and hold it forever. TP on this was 1830, pretty much there. 300 pip gain, 12 pip risk. I'll just play this out now. So yeah, that was TP. I TP'd on Asian session the start of this week, so it was the 2nd of January, so 3 days. I won to 23% of my account, which I'm relatively happy with. Leading into the new year, that sets us up brilliantly, nonetheless. So that's why, and I'll just play this on a little bit more and just show you why we like to set TPs, and why you know, why you should have precise entries and precise exits. And that's what I'm so fortunate to have been shown from Jeff and everybody in the Discord, and you know, and on the Zoom sessions, being able to get these accurate entries with these accurate exits, and capitalizing on these moves. Unfortunately, yesterday I was in this sell. I ended up getting taken out at break even. But that's something that that's something that I can learn to improve on, moving stop loss to break even a little bit too early in that position to bring price back to the downside. But nonetheless, it was a great trade, and I can start to see how Jeff capitalizes on these insane moves. And this was just something minor, in regards to what Jeff manages to catch. But a 300 pip game with a 12 pip risk, I'm happy with that, and we're only going to keep growing from this point onwards. So yeah,
rightly so.
That's it for me, Jeff, mate. So
all right, I appreciate you for showing that case study and just dropping some sauce. And it's crazy, every time I think about it, I'm just thinking like you've only been trading for about 8-9 months, and how far you came is ridiculous, because I've been in the game for like 4 years now, and obviously trading the kind of smart money way for about 2 years. And just you coming into the game and picking this up straight away has been I'm quite jealous, I'm not gonna lie. I've been saying that for some time.
It's all about how hard you work and how much time you put in, if you put the time in, these results will start to show. So
100%, man. So yeah, no, I definitely appreciate you dropping that source. I know it's like your first time doing a video or whatever else just for the public, but yeah, you absolutely killed it. So I definitely appreciate you kind of just dropping that source for us. So cool, man. Let me share my screen and go through some stuff for you guys as well. Okay, so also on gold, I'm gonna drop some source in regards to a trade. Like Harry says, catch some crazy trades sometimes and just hold on to it forever. So this was what, 2 months ago now. We managed to catch this trade, and it was absolutely ridiculous. Like, just, yeah, it did everything we wanted to do. Okay, so how do you actually recognize a pattern like this, and how do you actually catch a trade like this? Okay, so as you heard Harry kind of mention a lot about London, New York, again, time and price is a very key element to what we do. Okay, we don't just think, oh, it's moving here, so we're going to buy, and it's here now, so we're going to sell, and blah blah blah. And yeah, like everything's very systematic in regards to what we do, the days of the week that we trade, all these kind of things. Okay, so everything's very spot on in essence. So breaking this down, so when we're looking at this, again, you see what we call the distribution. Okay, we get this whole box, I boxed it up. Distribution is just essentially just a Wyckoff kind of method. Again, if you haven't seen a Wyckoff, we've got plenty of videos on there where you can actually watch, or just if you just go into the website itself. I haven't actually got the link open, but yeah, just understanding the distribution and accumulation will make you a lot of money in the game. So when we see this, again, how do I start recognizing it? I start recognizing this was a distribution from, let's go into the daily real quick. Again, everything happens for a reason. You have to understand where you are in the charts at all times. So in regards to this, so when this started forming, why was I interested in selling from potentially here? And I'll just take away all my drawings. So everyone, I forgot that happens when you click again. Let me click here and just show it with the mouse. So when we look into these areas, so again, we had equal highs over here. Okay, we already knew we took a big liquidity wipe from this area, which obviously the next target was these equal highs here. So naturally, everyone starts looking at this candle. Okay, but as I always teach the group, look at this first. Okay, by this, I mean, well, we call it a remorse candle. There's other names for it, but we call it specifically a remorse candle in here. And then look at that. There's always two entries. So we had the bottom of this remorse candle in here, and then we had our main supply candle in there. So first target was always going to be this, second target is always going to be that. So how do we know which one we go for? And how do you know which one to play? Obviously, we prefer this one, better risk to reward, blah, blah, blah. But this one has big weight behind it because we understand how they move the market and what they do and what they need to react, get back into there, take the money back, and then move away again. So once this happens, this is where the Wyckoff comes in very handy, because once we see this rejection in here one time, see it 2-3 times, okay, this is on a daily. So this is 3 days, 4 days, and then finally 5 days, we get that reaction, and then we drop even more. So to me, I start thinking, why is price reacting from here so many times? Why is it just holding up in there? And then this is where the Wyckoff comes in. So I'll go back into, let's say, you know what, let's go into the 1 hour right now. Okay, so we're going to the 1 hour. So when I'm looking at this, I'm just like, cool, why is price reacting so much in there? And let me just take off this indicator for now. Why is price reacting like that in there? So I start noticing that, oh, wait a minute, we're actually in a distribution phase. So again, we've got the PSY, buying climax, automatic rally, ST, signs of weakness, up thrust, and then we get the up thrust after distribution. And again, you've seen the times is actually happening. Okay, so we had this Asia session consolidation. Okay, we move up into New York, we tap. Okay, we're doing all of that, we drop, break a structure, which now signifies to me that price is looking to go down, especially after I see this UTAD in New York session. Then we drop, take out Asia session lows. Then the next move, again, every time broken structure is happening, what do you naturally expect next? You naturally expect next a pullback into a nice prime premium level. So again, you can see the Fibonacci levels there. Okay, let's pull that slightly to the side. Okay, our premium levels are the 71, 79, and 89%. Okay, so within there now, I'm thinking, cool. If those are premium levels, what can I see and what can I find that's going to be very interesting for a trade in those levels? So let's just replay my back a little bit more. Let's go into the 30-minute. So again, we go into the 30-minute. What's the thing I see now? So now I see this gap in proper price action that Harry is talking about with the volume profiles. Okay, so if you don't know how to use the volume profiles, okay, you could just go to fixed range. You could drag it from here to here, and then automatically, okay, this volume profile should pull up. It shows you the orders, where there's most orders, the point of control, which will be this line right here. And we've got the thin orders, okay, which will get attacked. Okay, so again, it's like, imagine, very bad example, but imagine you're in a gang or whatever else, but you're by yourself and you've got a gang after you, okay? Who's most likely to be attacked? The people that's with this big gang here, or the people that have hardly known with them? Okay, these guys are probably going to get attacked because the thin order books are here. We understand there's a lot of selling pressure here, but hardly no buys. There's literally no buys in here. Okay, boom. That's where we start looking for. Most importantly, what we're looking for in that area. Okay, most importantly, we're looking for a specific candle that caused the up thrust after distribution. So once we see that, we're like, yeah, that's our entry point. We've got this gap here. So great reason for the price to be attracted to that place because the algorithm wants to fill this gap. So it works great in our favor. So from there, we say, what's the risk? Okay, bottom of the body, 50% usually our entry, and then stop just above the body here. If you want to be extra safe, you can put it above there. Or I mean, I definitely wouldn't do that. But yeah, I said here should be enough. And if it's not enough, then we'll rework our entry. So just like that, we built that trade setup. So what's happening now? Okay, again, you're seeing time and price in perfect balance. So again, what's happening here? So we had the Asia session high, which was a test. Okay, because after the UTAD, we tend to get a test. So we get that test and then we drop down. These are now creating Asia session lows and Asia session highs. Coming into London, we tend to take our Asia session lows or highs and flip into the other direction. So what happens? Okay, we take out the Asia session low, create more liquidity here, and then we rally into this high over here, okay, in London. Okay, we're still chilling. We didn't make a new high, which is a very key factor here. We wouldn't want to make a new high to keep in line with structure. And then what we like to see here again. Again, let's drop into the 15-minute, where you'll be able to see this very cleanly. So on a 15-minute, what do we see here? Same thing that we saw with the UTAD, we see here. So again, we brought the structure through here. So what do you want? A pullback. Where is it pulling back into? Boom. So I didn't manage to get the trade in here because Asia session from 6 p.m. UK, I'm not really interested to trade. From London session, 6:45 a.m., I always wake up, I'm ready for this. So I wake up 6:45, okay, 7:45, what happens? We tap into this specific area right here. This is where, okay, you can put a sell limit here, you can play it however you want, or you can literally play this in here. Okay, for this trade, I put one sell limit in there with a lower lot size than I would usually use. And then for this one, I watched it very closely and I was very much involved. Okay, so on a 5-minute, walking over it, I let this happen. And I wanted to see how it played from there. Okay, once this candle engulfed, this was my entry, full lot size. Boom, we hit it. So I already had that sell limit there with smaller lot size than I will usually use. And then in here, full lot size. Because now what's the risk on that? Okay, the risk on this is smaller. Okay, you can see that about 3 pips if you want it to be. Okay, about 4 pips if you want to be very aggressive. Okay, or if you want to give it some space, you can have it at 13, 15 pips. So boom, we're in. So from there now, okay, let's just go back into the 1 hour. Okay, from there now, we're in a trade, great. Straight away, we see that very nice price action falling down, okay, into kind of coming into New York session, all these kind of things. So boom, we come back up into here. Okay, I can't remember what time frame I marked that up on. Was it 30-minute? No, it must be 15-minute. Can't remember what, yeah, I was looking at something in there anyway, but anyway, we do that. and yeah, continue going. And just like that, simply, okay. And again, remember why this is here. This is not supposed to be yellow. This is supposed to be the IPA. I remember I was thinking, why did I mark that up again? Okay, so just like that, boom, 50% of this IPA gets filled. That's your second entry, third entry, fourth entry, whatever you want to make it. Okay, but everything we do is very systematic in the way we look at things. Okay, and then I'll just literally just go into the 4-hour, and then we'll just look at that. So again, we understand we're in a distribution phase. So the next target is this level here. Again, 1850. Again, very systematic, very precise with what we do. You see these numbers here. It didn't get fulfilled for now, but I know it will in the future. So everything we do very precise, very systematic. So from there, what's the next target? Filling this big IPA. I say 50% of this needs to get filled at least. So around 1835, that's the next target we're looking at. Okay, we hit play. Okay, and then yeah, I mean, we actually smash through it. Then the next target from there, same thing, filling that IPA. What's the next target from there? This candle. Okay, that was the ultimate target that we wanted to fulfill, because we broke structure. And like I said, every time we break structure, what do we want? Or what do we expect to see? Pullback. Where would you like it to pull back to? Premium zones. Again, 71, 79, 89%. So you can see why our TP was right there. Okay, TP smashed. Okay, bang on. Again, 50% IPA. That's where you put that there. And then we get that very, very clean price action. Okay, and then from here, I mean, gold literally just did its thing. Okay, we dip back below that. And again, we do the accumulation phase and start doing that, which is what Harry showed you earlier on. Okay, so very, very crazy trade, which is why you can see that was a ridiculous kind of move. So yeah, and then the last one I want to show you again, I'm going to go over this one slightly quicker. Okay, but NZDJPY, very similar thing, very, 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 very similar. Okay, so it's NZDJPY. Okay, right here. Okay, so let's rewind into why we looked at this trade. Okay, so let's just go replay mode into here. Okay, so when we're looking at this one, okay, when we're looking at this one, it's simply just, again, systematic, very, very systematic. So what caught my attention with this in the first place? So what caught my attention with this in the first place is we swept liquidity, as we always do. This candle did this thing, and we break structure right here. So when that break of structure happens, I was just thinking, nice. We should pull back into this candle now. Okay, so let me just put my thing, break of structure. Okay, I've got OCD, so let me just put this right at the top and make it straight, because my OCD will start kicking in and yeah, my brain will start crying. So cool. We break structure right there. So I'm just like, yeah, great. Now, what would we expect? We'll expect a pullback. Okay, so we look at premium zones. Again, 71, 79, 89%. That's what we're interested in. But what does it actually react off? 50%. It's nearly 60, 62%. Again, that's classic retail level that we don't like. Okay, but we see that happening, so it's all good. And here, you could catch a buy, because once you see this, it's not coming down here, breaks above again. That was an entry, that was an entry. But anyway, that happens. So now I'm like, we broke more structure. Okay, let me just borrow this for now. We break more structure, and I'm thinking this candle still hasn't been hit. So at some point, it has to come back either to here or to here. So now I'm looking for signs of any reversal. And what's the reversal signs that we see? We had an up candle in here after it touched into a very specific number, again, 82,500. Again, if you've seen any of previous videos, I always say 20s, 50s, and 80s are very sensitive institutional numbers. Okay, if you see those kind of numbers anywhere around, pay very close attention to them. So we tap 82,500, very nice. And then in here, engulfing candle. That's what got my attention. Once I see that engulfing candle, and then this one, the next day comes back up, rejects, I'm like, oh, what is going on here? We're seeing signs of reversal. So I'll go into the 4-hour just to take a closer look. I'm thinking, what the hell is happening here? So what do we see? We see that candle, very similar to gold. We see that candle went up, okay? Last supply candle, and then we broke structure, break a structure through here. So I'm like, oh, something's happening. Then we come down slightly further, create equal lows, head up, take another high candle there, mitigation candle is done, and then we make equal highs here again. So I'm like, oh, this is looking very saucy now. So I was like, let me just actually go to the smaller time frames, maybe 2-hour or something. Let me see if I can see anything clearly, and look at the difference between the candles now. So you can imagine why I marked at the H2 and I also had the H4. So again, we always have 2 entries that we're looking at. Like I said, there's always 2. If it's more than 2, you're not looking at something correctly or something's off. So there's always 2 entries. So I see that on a 4-hour and I see this on a 2-hour. Obviously, we'll prefer the 2-hour for better risk rewards. So we see the gap getting created there, see the lows, we make even more highs over here. So how does this play out? Okay, we see what's happening. Okay, and then let's just hit play. Remember this. Okay, boom, tap. Remember the 4-hour that we marked out? Taps right into it. Again, very specific numbers. What did I say about numbers? 82, 20. Okay, 82, 220. Taps right into there. That was the entry. Okay, as simple as that. What's our targets? Targets, taking out this low in here. Okay, target right there, taking out that low, maybe filling this gap. But ultimately, what was we looking at? Remember I said, this is why we catch crazy trades. You could go into the 15-minute, you could go into the 5-minute, but you have to ultimately know where price should be going and where would you like it to go. So I say we needed a pullback minimum into here. So if you cash in that trade, okay, and what was the stop? 30 pips, okay, 30 pips, but we didn't even need it. It was literally what, 2-pip drawdown, if that. I don't think I had any drawdown really. Okay, so minimum, we're filling this gap, 280 pips or so, coming down to this down candle, about 470 pips, taking out this low, about 600 pips if we actually came into our candle, okay, 685. So when we see that now, okay, and it took some time, okay, we didn't quite get to the candle I wanted because we created these equal lows over Christmas, and I wasn't looking at the chart this time, and I missed that move. But anyway, it's all good. But just showing you exactly how we look at trades very systematically. Again, another liquidity wipe, which is why that happened. We look at everything very systematically in a way. Okay, and like Harry was talking about in regards to Discord, okay, this is our Discord group here. Again, everyone's talking about called gold this morning. Everyone was happy. GU done its thing. Okay, it's a very entertaining group sometimes, and again, very great quality setup here in regards to GJ if you're potentially looking into that. So there's a free source for you. Okay, this GU trades has played out quite beautifully actually. I haven't actually seen how it's reacted, but again, you're seeing what the kind of things we're posting and what we're talking about. Okay, again, we're not always saying this is definitely going to happen. You can see the language you're using, see how it develops, but this is what I like to see. And then let's actually go to GU right now. I think it actually has done quite well in regards to what I thought was going to happen. Okay, so let's go into the 1 hour. Okay, it actually reacted quite nicely. Not bad at all. Okay, so similar to GJ. So again, you can see in regards to the picture I posted earlier on, what time even was this? Okay, I can't quite, 7:44. That's my favorite number as well. So 7:44 in the morning, and then yeah, you can see how that's kind of reacting, and yeah, we're looking good. We're looking good. So again, for this GJ one, I'll be waiting for it to get back up into this area. But yeah, we just thought we'll share some source of you. Okay, new year, a slightly longer video. I now haven't made one for some time, so hopefully this makes up for it. Forgive me, but hopefully you've enjoyed that. But yeah, until next time, guys. I wish you good trading, man. But Harry, is there anything you want to kind of end off with? Say to the people.
No, bro, no. Just it's going to be a crazy year, and if you're not on the train, you're getting left at the station.
Exactly that. But cool, man. Until next time, guys. I hope you have a good one, and we'll catch you real soon. Take care.